Hello everyone, George DeSantis here with the look at the market for the week ending Friday, May 17th, 2019. As usual, we'll take a look at a disclaimer before we get going with the charts. Just to remind you that I'm not a licensed professional investment advisor, so if you need that kind of advice, you should seek it out from someone who is a professional investment advisor. I'm a psychologist and I do this for my own purposes. Put it on YouTube. Those who care to look at it can do so. We'll take a look at the general market vis-a-vis the S&P 500. I usually use that. And then we'll take a look at some individual stocks. And then I did some interesting, what I think is some interesting screening from IBD stocks and so on. We'll discuss those, okay? Let's get going with the weekly chart of the S&P 500. So here's the weekly chart of the S&P 500, the one that I use anyway. First thing I like to look at are the moving averages. We have in this case, a 4-week moving average, a 9 EMA. We have a 30 weighted moving average and a 50-day moving average, 50-week in this case, moving average. They're above each other still, so technically we might say that we're still in an uptrend on the weekly chart insofar as moving averages are concerned, at least the ones I'm using here. So that's one thing. The other thing is that I don't know if any of you are familiar with Rick Monteith's work at efuturevision.com, but he has a free video there where he describes what he calls a 930 system, and that's why I use this 9 EMA and a 30 weighted moving average. Got that idea from him. What he talks about is when the 9 crosses over the 30, as it did back here, 9 crossing over the 30 is the green line back here. The first drop and close between the 9 and the 30 is considered a buy point insofar as he's concerned. So we are basically in this buy zone between the 9 and the 30. We're closing in between there. We'll see if he's correct. We'll see if we do move up from here, if it was worthwhile buying here. The Bollinger Bands are further away from the price, so we have room to the upside to move. The one negative right here is using these new parameters of the parabolic stop and reverse indicator. Parabolic went above the last 2 bars, so parabolic is indicating that we have a downtrend. Well, that may or may not be so. We'll find that out. Notice that we came pretty close. We actually went below this previous support resistance line at about 28.15. Some people say it was 28.10. We could argue about 5 points. In any case, notice that we just about hit the 30 weighted moving average here with this low of this bar, almost hit that. But we may be finding some support around this area, 28.15. We'll see how true that is. Let's take a look at other indicators. MACD is still above the 0 line, which is bullish territory. It pulled back a bit, but there is no divergence right here. So nothing in terms of a divergence to be concerned about. And these pullbacks occur, quite often with MACD. Williams percentile, the 30 period that I use, you could see that it crossed, let's pull this back a little bit. You could see it crossed above the magenta line here. And whenever it's above that magenta line, minus 50, it usually signals that we are in an uptrend. So we're still looking good there. The RSI 12, which is a very good timing indicator for the trend on a weekly chart, crossed above the 40% line here, which was a signal to be bullish and to be buying, and it's still above the 40% line. And so insofar as the weekly chart is concerned, it is bullish. It's still in an uptrend. We do have some conflicting notions here where we have the parabolic above the price bar, but in general, I think the preponderance of evidence points to a continuation of an uptrend. We have a buy zone here, etc. So let's look at a daily chart. Okay, here's a daily chart of the S&P 500. And what we see here is that the 4 EMA did cross below the 9 EMA right here. Since then, we had a downtrend, at least on the daily chart. We seem to have found that support at 28.15. That will be determined, of course, in the near future, whether or not we continue to move higher or we break below it. If it's support, we'll continue to move higher, of course. And now we have on the daily chart, though, you'll see that the parabolic in the last 2 days turned positive. So while on the weekly chart, parabolic is saying we have a downtrend in effect, on the daily chart, we're getting a slightly different picture. We're getting a picture where the daily chart is saying, that downtrend may be over that we saw on the weekly chart. So we do have the moving averages now below each other. I mean, the shorter term 4 EMA is below the 9 below 30. But we seem to be turning around. I like these candlestick patterns that I'm seeing here. We had a bullish harami. A bullish harami candlestick is when the body of this candle is totally engulfed by this, sometimes referred to as a pregnant woman, this body inside of this one. And then that was followed by a bullish engulfing candlestick, the body of this totally engulfed by this. This was on Wednesday. On Thursday, we gapped up. On Friday, we took a pause. We hit the 30 weighted moving average and we pulled back and took a pause. So let's take a look at some of the other indicators. MACD is trending up from below the zero line. Those of you who've read my friend Alex Zelda's books, Trading for a Living, Come Into My Trading Room, etc., you'll know that he says, look, when MACD histogram starts trending from below the zero line, it's one of the better times to be buying whatever the instrument is, stock or index. And this is what we have here, consistent with this bullish indication here. Now, Williams percentile dropped below the magenta line, the minus 50 line, and it just ticked up above it to touch it here and pull back a little bit. So we'll wait to see how that develops here. I'm expecting it to go higher. Of course, all of this is in spite of all of the fiasco with tariffs and who knows what and who pays and who doesn't pay the tariff. We have people in the White House saying that China's paying tariffs. We have other real economists are saying, hey, the importer and the consumer eventually pays the tariff. Who knows? I'm not an economist. RSI 12 on the daily chart is looking to cross above the 40% line. So on the weekly chart, we seem to still have an uptrend. On the daily chart, we seem to have played out a divergence of MACD that we saw right back here. We saw that divergence of MACD, and we seem to have played it out, and now we seem to be trending up again. That's my take. Now, I thought we would take a quick look at an old favorite of ours, the best choice chart on the S&P, the SPX. And you'll notice that since we had this pullback in December, we've been trending up slowly and nicely. And then recently we pulled back. And now we're at that 10%, we hit the 10% channel line, extreme line. And now we're at about 19-20%. So what that tells us is there's a lot of room at the top for us to go before we become overbought on the S&P. Just thought I'd show you this one. And here's a chart of the SPY, of course the ETF of the S&P. And so you could see how that overbought situation is occurring here. Sorry, oversold. I get confused with overbought, oversold at times. So you have to excuse me for that. you will see that it hit the price of the S&P hit the long-term moving average, which is like a 200-day average, approximately. They have their own calculation. And now we're very oversold. So likely to go up from here, I think. And one last chart on the S&P is the StockCharts.com's chart with the Alex Elder's impulse indicator, red, green, and blue bars. And it's a censoring indicator according to Alex. And we could see here that we had red bars coming all the way down here. This is a daily chart. And so now we have blue bars. Blue bars tell us that we're not allowed to go short anymore. It restricts, it's a censoring thing. It tells us what we're not to do. We're not to go short here. If that's the case, then we should be either buying or holding. And that's interesting from a bullish standpoint. Okay, let's take a look at some individual stocks on Shaken. Well, first I'll show you what I still own in my accounts. I still own these stocks here. You could stop the video if you wish and take a look at them. I won't go through each one of them at any length. They're still doing well. I eventually want to weed out these neutral stocks, some of them anyway. I want to hold Visa, but I might want to get rid of Fortinet and Salesforce, not sure yet, but I just want bullish and very bullish stocks in my portfolio. So I have to make some adjustments, but I do have covered calls on these two. So anyway, I did some research which I want to share with you, and we'll take a look at those stocks. I did some reading of IBD today, and I decided to do this. All the stocks that get very positive mention on IBD, I list them here. I'm going to send you this email as an email anyway. But if you wish, you could stop the video and take a look. I listed all the stocks that they had positive mention of, and then I went to Shaken Analytics, and I made up a short list of stocks here that of the ones that are in those lists, those many lists. These are the stocks here that meet the buy criteria on Shaken Analytics. Okay, I'll send you this email, but let's take a look at some of the stocks. First one is Cadence Design. I still own it. You could see it's oversold. And one of the criteria was that the stock has to be oversold if we're going to think of buying it here. You can see that these are going to have to go through quickly here, but it meets all these criteria. And I'll send you the email and explain that to you. The next one is CYBR, which is this. CyberArk Software. You see how it is oversold, meets the criteria, the other criteria. Another one is ESNT, which is Finance Group. And you can see again, oversold, positive money flow, etc. Another one is CMCSA, which is Comcast. A little bit of a pullback on money flow, but you can see it's oversold. Very good relative strength, etc. Lockheed Martin is another one. You can see Lockheed Martin is oversold, and you can see that it's got the money flow, all the other indicators looking good. And how about MasterCard? Same thing here. All these indicators looking good, oversold and ticking up, right? So these are stocks that meet the criteria to be buying. PAYC, Paycom, Paycom Software, similar thing. Oversold, meet these criteria. So I thought you'd like to see this list. A lot of research, a lot of time spent doing this. And we're running out of time here, so I'll show you PCTY and then meet all the criteria. PayPal is another one. You see, same thing. Twitter is another one. And the last one is Upland Software. These stocks all meet the buy criteria for Shaken Analytics. So I think it'd be worthwhile I already own 3 of them, PayPal, MasterCard, and Cadence Design. So I'll have to leave now. Have a great weekend. I hope you did.